I just want to welcome you once again. All of you just joined us now recently. I hope is everyone good. Yeah, thank you so much. Let's just start. Others will join us while we're on the way. Network is always our enemy, guys. So I'm very, very sorry of being late in hosting the class now. Yeah. All right. Let's just continue with our lesson. Um, Today, as I said, today we're going to look the elements of financial statements. We have done more things that is all about the concept of accounting, whereby we're looking for the principles, the procedures, and all concepts that are included in accounting. All right, and then today I like us to look more further about the elements of financial statements and the basis of accounting, which is our learning unit number 2. And then remember, in your first assignment, you will need to master and understand your learning unit number 1, 2, and 3. Learning unit number 3 is all about VAT, the one that we will deal with next week. But this week, I like us to get information in these 2 learning units. All right, let's get started. Okay, this learning unit number 2 is all about the financial or the elements of financial statements and basis of accounting. All right. But before we can start, we need to discuss the main elements of financial statements. Those statements are called, it says that before we can discuss the basis of accounting, we need to know what is the statement of financial position and also the statement of profit or loss and other comprehensive income. Therefore, there are 2 main types of elements of financial accounting. Yes, so we need to deal with all those elements of or financial statements. Yes, financial statements, and then we can do the elements of financial statements after. Right? The elements of financial position, which is a balance sheet, it will be an asset, owner's equity, and liabilities. And then from the elements of statement of profit and loss and other comprehensive income, it will be income and also expenses. But before we can get started on that one, let's just look these elements or these financial accounting or financial statements firstly. All right. We have a statement of financial position. A statement of financial position provides information about the following. It gives us the information about the economic resources available to the entity to generate a future cash. All right. The financial structure of the entity with emphasis on own and borrow capital, which may also be used to predict the future borrower's needs. A liquidity of position of the entity. Liquidity is any entity's potential ability to pay its short-term debts. In other words, it is the available of cash and other cash items which can easily be converted into cash to pay short-term debts. This information may also be used to predict the availability of cash and also the setting of the debts for the same period. All right. And then these are the things, guys, that we need to know after we can get into our financial position as a financial statement of the business. All right. Then the fifth one, it says the solvency of the entity, right? Entity's position. Solvency refers to what extent to which an entity's assets exceed its liabilities. It may also be used to predict the availability of cash over longer periods to meet debts as they fall due. The elements that are directly related to the financial position are assets, owner's equity, and also liability. Assets and liability. Okay, let me underline this one. Assets, liability, and equity or owner's equity. All right. These are the elements of financial position. Therefore, there are two types of elements of, there are two types of financial statements, that we are going to deal with here. The first one is for the elements of financial position. And then the second one is for element of profit and loss and other comprehensive income. And then these two we are going to deal with. Right. Some people are saying they can't see my screen. I'm very sorry. Let me just reshare the screen now. Thank you so much for letting us know. Very sorry about that one. Right. I'm resharing the screen now. All right. Thank you so much. All right. We can all see now.
Yes, sir.
All right. Thank you so much. Thank you so much, guys. Let's just continue. All right. As I've also said to you, tonight we are going to look the elements of financial statements. But before we can identify those elements, we need to know those financial statements. What are they? We have a statement of financial position, that is the first, and also the statement of profit or loss and other comprehensive what? Income. All right. Let's just get started, guys. All right. We are going to start by looking the elements, all right, elements of financially position. Yes, elements of financial position, right? Then from the elements of financial position, we have assets, owner's equity, as well as liabilities. Good. We have assets, owner's equity, and also liabilities. Let's mute our mics. Those who unmuted their mics, please. Thank you so much. Thank you so much. We mute our mics so that we can understand each other. Okay. Thank you so much, guys. We have assets, owner's equity, and also liabilities. There are three types of elements of financial what? Position. There are three types of elements that are included in our financial position as a statement. Okay, let's discuss what are the assets? What is assets? What are assets? Assets are defined as all those resources in any entity that is controlled by the entity. All right, let's underline the word resources. The word resources are the resources. Yes. All right. In the entity that is controlled by the entity. And then it says that the represent cash or potential inflow of cash, that is economic benefits. And then it says that assets are divided into current assets and also non-current assets. All right. Now, what are the current assets? Therefore, there are two types of assets. We have current assets and also the non-current what? Assets. Remember, assets are all the resources that are controlled by entity. All right. For example, we've got vehicles that are used to transport goods and services into our customers that are used inside of the business. So that particular vehicle, it's not belongs to the owner, but it belongs to the business. So that's why we are saying are those resources that are controlled by what? The business or the entity. All right. And then we have a fact that assets are divided into two categories. We have current assets and also non-current assets. Now, what are the current assets and also non-current assets? Current assets are the possessions or resources that can be converted into cash within 1 year. Are the possessions or what resources that can be converted into cash within 1 year. For example, trading stock. Therefore, if any asset is current, therefore that particular asset, we can use it in order to get cash within 1 year. For example, trading stock. Trading stock are the goods bought in order to resell them at a higher price. Remember, when you are starting your business, maybe you're providing goods and services, you need to see your suppliers, people who can give you those goods and services in order to resell them into your customers. And then those goods and services are called what? A trading stock. A trading what? Stock. And then a trading stock is something that we used to do in our business in order to get what? A profit. So it is possible for us to sell all stock that we have been bought from our suppliers to our customers within 1 year. Actually, the stock period, it stays only 60 days inside of the business. Only 60 days inside of the business. That is almost 2 months, if I'm not mistaken. Yeah. So okay, now we know now that whenever we're talking about what a current asset is, something that is current, yeah, is something that is current and is something that is can be converted into money within 12 months or within 1 year. All right. Another example, it's all about debtors. Now, what are the debtors? What are the debtors? Debtors are the people who buy goods and services on credit from the enterprise. Therefore, the business can sell goods and services on credit to their customers. All right. People who can buy goods and services on credit from us, we call them debtors. And then from that fact, now we know that debtors are belongs to what? A current asset, because debtors, we give them a specific days. Usual business, they give them only 30 days to pay their money back. Therefore, within 1 month, we can get our money back. So that's why we can say debtors are the current asset, because debtors, we can convert them into cash within 1 year. All right. Let's move on now. Let's look non-current assets. What are the non-current assets? Now, non-current assets are the items which with a long life that are bought with no intention to resell them. They can convert it into income longer than 12 months. Now, non-current assets are the things that they stay long time in our business. All right. There is someone who is unmuted the mic. Let me just do it for him or her. Thank you. Right. Now, as we are talking about a non-current asset, guys, non-current assets are those things that they usually have a long life in our business. Né? Just for example, land and buildings. Land and buildings. Land and buildings, as we all know, that are the premises or are the buildings bought for the running the business. Therefore, if you want to start your business, and then you need a land and buildings so that you will run your business. You will run actually the location of your business and also the building where you will run your business. Né? Yeah. So for the fact that we know now that a land and buildings is stays long time in our business. Therefore, in your community, there are so many businesses there. And then their land and buildings, maybe it's longer than 10 years now, it's longer than 15 years now, 5 years now. So that's why we can say are the resources which are non-current assets. All right. Another example about non-current assets, vehicles, as I also mentioned, vehicles. Vehicles, it's means of transport that the enterprise has bought for use by the enterprise. Therefore, we buy cars, we buy vehicles in order to transport goods and services from our business into our customers. So those vehicles, they usually stay long time in our business, and then we use them many years in our business. Né? So that's why we call them the non-current what assets. Maybe let's take a last one, which is an equipment. Equipment is also a part of a non-current what assets. All items needed to run the business, e.g., a cash register, and also computers. Computers are also part of equipment inside of our business. So, ladies and gentlemen, these are the main definitions, or these are the simple definitions of assets, non-current assets, and also current what assets. But if you have any question before we can proceed by looking our liabilities, you can ask, please, if you have any question, Okay, let's continue if there is no question further. All right, now let's look at liabilities, guys. Yeah, I'm happy because now you know about assets. Now let's learn about liabilities. Yeah, without liabilities, guys, we can't survive. You can't run your business because you need money from outsiders. You need to borrow a loan in order to operate your business. So we all need liabilities. Yeah. All right. Now liabilities are debts. Yeah, liabilities is all about debts. When we are talking about liabilities, we are talking about what? A debt of the business. So it says that liabilities refers to the debts that will be paid off within, that will be paid off within specific year. But here, according to my definition, it says that if you have a liability in a financial terms, it means that you owe money to someone or to some entity. Yes. And then whereas asset refers to a potential inflow of cash. Yes. Assets are causing the inflow of cash. If I'm saying inflow of cash, therefore a business is receiving money through assets. And then liabilities represent a potential of outflow of cash from the entity. Therefore, liabilities are causing the business to pay more money. Yeah. So there is an inflow and also the outflow, right? Liabilities are divided into current liabilities and also non-current what? Liabilities. Now, a current liabilities refers to the debts that will be paid off within 1 year. All right. All debts that you can be able to pay them within 1 year, those debts are belongs to what? To the current liabilities. For example, we have a creditors. We have bank overdrafts, and we have a short-term what? Loan. And now the question is, what are the creditors? Creditors are people who provide goods and services to the entity on credit. Therefore, the business can buy something somewhere on credit. And then those people who can sell or who have a potential to sell on credit or to provide us with goods and services on credit, we call them a creditors. They are creditors. Yeah. So also a bank overdraft can be paid within 1 year. Therefore, it belongs to the current assets. Bank overdraft, the simple definition, it says that when the enterprise withdraw more money from its current bank than what it had in the current account. Therefore, when you have 400,000 in your bank account, and then now you want to buy a car of 600,000, then you will negotiate with a bank that you need this car, but your money is less in your account. And then after your negotiation is finalized, then the bank is accepting that you can buy this car. And then you should know that you will pay this money back. Ne? They usually give you a period that after this month, after 6 months, or after even 10 months, we need our money back. And then negotiations are done. Then you can withdraw. That's why we say it is a bank overdraft. Therefore, you over withdrawed money. You have been withdrawn more money than the one that you have in your bank account or in your account. Yes. Yeah. And then we've got a short-term loan. People usually can borrow money, maybe the one that must be payable in 6 months. And then we can say that it is a short-term loan. Every month that must be payable less of 12 months, it will be a short-term loan. But if it's more than 12 months or it's more than 1 year, it must be a long-term loan. All right. Those are current assets. All those are called current what? Assets. Okay, let's move on by looking the non-current assets now. Now, non-current assets are debts that will be paid off over more than 1 year. And then now we can talk about long-term loans and what. Now we've got something, or we've got a debt that can be payable in more than 12 months or in more than 1 year. Imagine yourself, you are going to your bank and then you borrow maybe 400,000 and then you will pay it off after 5 years. So that is a long-term loan. Yes, that is a long-term borrowings. Therefore, it will belong to the non-current liabilities. It will be regarded as a non-current what? Liabilities. All right. For example, we know long-term loan and also mortgage bonds for purchasing what? A lands and building. All right. I think we are done now about liabilities, guys. Okay. Let's just proceed. Look for owner's equity. Owner's equity. I like owner's equity because it's all about the interest that I have as an owner in my business. Okay. Owner's equity is the remaining interest in the assets of the entity after deducting all its liabilities. Therefore, if we want to get owner's equity, we must take assets. Remember, assets are the things that cause the business to receive money. There is an inflow of money because of assets. Ne? We might say minus liabilities, which are the debts of the business. Then we can get the remaining one. It will be the interest, which is the remaining money that we have, which is owner's what? Equity. Right. We minus liabilities from assets, and then we get the interest. The interest is owner's what? Equity. There, that's why it says owner's equity, or equity is the remaining interest in the assets of the entity after deducting all its liabilities. We exclude all debts from our assets, and then the remaining amount of money is owner's equity. Then equity represents the interest of what? Of the owner in the net assets of an entity, which means the part of assets against which were or there is no claim from other parties. Therefore, they tell us that this thing of owner's equity represent the interest of the owner. How much money did you make? And then you will see by taking your assets and minus liabilities, and then you will see money that you have managed to make this year. All right. Now, let's just look the statement of profit and loss and other comprehensive income. Right? Profit is used as a measure of performance or as a basis for other measures such as a return on investments and earnings per share. The elements that are directly related to the financial performance are income and also expenses. And then profit is calculated by subtracting expenses from what? The income. Therefore, if we want to see the profit or whether we have made a profit or loss, we must say incomes minus expenses. Then it will be equals to profit. Then the question is the business can make loss? Yes, a business can make loss. Whenever their expenses are greater than incomes, and then the business will make what? A loss. Yeah, because if we can say here our incomes maybe 100,000, then expenses 200,000. Then when I have a negative number which is 100,000. Yes. Therefore, that is a expense because our expenses are more than incomes. Therefore, we've got what? A loss. Made a loss. Right. Let's move on, guys. Now, what are the incomes? Because we need to define all these terms so that we can understand much better. What are the incomes? Incomes represent the monetary value received or receivable by the business in a particular period, usually 1 year. Therefore, incomes, it's all about an inflow of money. We are receiving money, monetary value, that is receivable by the business in a particular period. Yeah, so those are incomes. And then example of incomes, it is a service rendered, sales, and also a rent income. Right? We know that a service rendered is regarded as an income after a business have been rendered a particular service. For example, if you have a business which is a saloon, yes, therefore you are selling nothing, but you are providing a service. And then by providing your service, the income that will get from that particular service, it will be called a service is what? Rendered. But if your business is a trading business, maybe we are selling clothes and more and more and more, then it will be a sales or revenues. And then a rent income, it is all about when you have a portion of a building, then you have a tenants, people who are paying for you to use that particular building. They are called tenants. Ne? Then it will be, that particular income will be a rent what? Income. All right. And then expenses represent the monetary value paid or payable by the business within certain period of 1 year. Therefore, according to expenses, there is an outflow of money. Expenses, we need to pay for them. Ne? There is an outflow of money. Therefore, the money is going out from our business. Now we no longer receiving money, but we are paying. Yes, such as a rent expense. Business can take or can rent for a building, maybe any building that they operate in. Then the amount of money that they need to pay is a rent income. Also, salaries and wages. Everything that must be payable, guys, it is called what? Expenses. Salaries and wages. Salaries and wages, we need people to work for us, to work inside of our businesses. Therefore, those people need to pay for them at the end of the month. Therefore, that particular money or these salaries and wages will be called expenses because we need to, there is an outflow of money because of them. Lastly, we can say water and electricity. Water and electricity. Yeah. Water and electricity can be an expense to us because we need water and electricity in our business. We can't operate machines without water and electricity. Computers are operating by the use of electricity, so we need to pay for electricity so that we can keep the operation process in our business to be in control. Okay, thank you so much, guys. Now we have done about all the elements of financial accounting or financial statements. Now we have done with them. Remember, we only have two main statements of financial, or we have main statements, yes. Financial accounting, we have what? A statement of financial position and also a statement of profit and loss and other comprehensive income. Then we have done the things or the resources or the elements that are attached. All right. Now let's look the important thing right now, which is a double entry principle. Then from the double entry principle, we can look at an accounting equation. Okay, now a double entry principle, guys, after we've done everything, now I want to introduce you in accounting equation. In accounting what? Equation. Yes, I want to introduce you the thing that is called accounting what? Equation. All right. All right. Then accounting equation is the mathematical equation whereby we are looking for assets equals to owner's equity plus liabilities. This is our accounting equation. It is called a mathematical what? Equation. Assets equals to owner's equity plus liabilities. All right. And then the fact is that we now see whether I may be correct if I'm saying owner's equity equals to assets, okay, minus liabilities. The answer is yes, I'm correct. Because if we calculate by the use of this in the same amount, we're going to get the correct answer even if we are used with this. We're going to get a common or the same answer. All right? Yeah. So we must know that assets are bigger than liabilities and also are bigger than what? Owner's equity. That's why we are taking owner's equity plus liabilities, and then we can get this one, which is assets. Yes. All right. Let's move on by looking the effect. But before we can look the effect, we need to look the thing that is called a double entry principle. A double entry principle, it says all transactions must be entered into by an entity must be accounted for in a ledger. The process of recording a transactions in a ledger will be discussed in learning unit number 6. Okay, Shuti, we are going to discuss more further about the process in our learning number 6. But in short now, let's just look the ledger in a book containing a set of individual accounts in which transactions of the same kind are grouped together. Okay, in this learning unit, we will discussing the ledger which contain all assets, liabilities, owner's equity, incomes, and also expenses accounts. All right, all accounts are drawn in T form, with the left hand side called a debit side and also the right hand side called a credit side. All right, let me just draw that particular account. For example, now we have a business account or a bank account. Here is a bank account, guys. I'm making an example. Got a bank account. Right, this is a bank account. And then according to our information, it says that on our left hand side, we need to call it a debit side. Ne? Right, our left hand side, it must be a debit side. And then on our right hand side, a credit what? The credit side. Yeah, all right. This is a bank account that must be drawn. And then it says that all accounts are drawn in a T form, as you see this account. And then on the left-hand side called a debit account, and also on the right-hand side called a credit account. Now you can see how to draw an account and also how to show debit side and also a credit side. Always on your left-hand side gonna be a debit side, and also in your right-hand side it will be a credit side. Okay, now we are left with 1 minute. Let's just join again for the last 30 minutes to do the activity number 1 of the double entry principle. Right, I will close this meeting and then we're gonna join again, guys, using the same link in our group WhatsApp.